G'day, buddy miners. I've done a bloody alley GC today. I own a stock that's gone down shitloads. Can't believe it.
The Matty ETF, mate.
Taking one for the team.
Oh, well, big news out of Paladin. And, mate, we're going deep into Namibia. Mate, it's... I can't make a water-related joke without getting cut off the air. So, anyway, there's a bit about water. So, JD, you've got Kingsgate going as well, Cobber.
Yeah, quite an interesting story there. So I thought we'd chat about that one. But let's start off with Paladin, the big one. They're getting smashed, mate.
Ding, ding, fucking ding, unfortunately. Down bloody 25, 27% today.
Not good.
That's off the back of the bloody quarterly as well, where they dropped probably, 11%?
It did.
11, 15 or something on that. So, and a bit of context on water in Namibia, and there's a bit of water-related stuff here. It's like Namibia's in a bit of a horrific drought currently. I've seen newspaper articles saying once in a century. So it's and we're going to go into where the water is, who owns the water, how the water works in Namibia. So, okay, so in addition to what was disclosed in the quarterly, where they said lower than expected stockpile grades from the historic stuff that was mined there, so they've overcalled what was going through at this point, and recovery issues. They've also disclosed today that there's been water supply disruptions from NAM Water in October, which has seen them now drop their guidance for Langer Heinrich. Originally, it was £4 to £4.5 million for FY25. Now they've dropped it back to £3 to £3.6 million.
That's a big change of guidance.
Yeah, so about a million wiped off for the year. Remember, we're halfway through the year, so they're effectively dropping off $1 million for 3 quarters. So. Now, a bit of a double whammy, actually, not related to this, but there was actually a £1.5 million RFP issued last night by a US utility for a 4 to 5 year term. So we've had $1 million come out from Paladin, and then there's been requests for another £1.5 million to be supplied. Not one of the big 3 utilities, but another one of the big ones. So that was interesting. So
might be worth just a quick one line on RFP.
Request for proposal.
Yeah. So demand.
Yeah. So it's an on market tender effectively for uranium instead of an off market discussion between two parties. They put it out for tender, and everyone says, "I'll sell you that much for this much."
Yeah, which is one of those catalysts we've sort of talked about in the past.
Yeah.
I think the thing with the news out from Paladin today is did we have any idea that they were having some water issues with NAM Water in the quarterly that came out a couple of weeks ago?
I looked back at the quarter. There was nothing that specifically said anything about water supply disruptions. And we'll go through a lot of the responses from the ASX Aware letter in the back end, and a lot was around the tailings water recovery, the issues with the thickeners and stuff like that. So, yeah, we'll figure out is it NAM Water's the problem, or is it the processing plant that there might be some issues with? But we're going to give a bit of a landscape of like Namibia, because it all ties in together. So they did have a call this morning, and look, a couple of comments for it. They're saying that they haven't been able to fill all the water in they mentioned bladders. I wonder if they've got old get wets bladders over there. I assume they do. Haven't been able to fill all that up due to water supply from NAM Water, which comes from a pipeline from the coast. I'll bring a map up here, and that's fed from some aquifers that go into this base reservoir, and also a desal plant that's owned by Arano. So I'll give a bit of history there. Buddy, see you, Paul. Take it easy, mate. The WA's best podiatrist just dropped me off some thongs after I had a blowout. Mr. GC, you'd call him. Legend. And then it sounded like the water rates, even for the processing of that, variable because of on a daily basis, where they just can't just doesn't sound like, pardon the pun, flowing. So some days they get over deliveries of water, some days under.
Regardless, they haven't been able to fill up their spare capacity.
Yeah,
so it's been intermittent.
Yeah, and they said there's a 2-week shutdown coming up in November, and they're saying that
shutting the plant.
Yeah, that will give them time to fill up their water storage and give them about an 8-day buffer. And the question was asked about their contracts now that they're taking £1 million off their guidance, is that going to see them effectively? Do they have to go into the spot market to fulfill contracts? But they said they're confident on meeting customer delivery obligations, and they have flex in the contracts. So there's a bit of variance you can have in the contracts, and they said they've utilised that flex already.
Yeah.
So,
and the call was really interesting, right? Because the analysts kind of didn't let up on the water questions, and I think anytime analysts are sort of caught off guard on something, they're pretty keen to hone in on that point. And they didn't get heaps in return, but I clipped together some of the questions from them just for the money miners to get some context here.
Go you, Trav. Thanks, mate.
And we also think that the issues with the supply on NamWater, where we had some outages, are temporary and readily resolvable over the next little while.
What data points should we be watching for to give us comfort that the water issues have been resolved?
I think pretty clearly our quarterly reports going forward will be pretty transparent, as we have been with, as you saw, with our September quarter.
Yeah, I guess I was looking more for a specific, data point with relation to the water itself. You're saying that NamWater deliverability has been an issue, and also then tailings recovery. So those sorts of data points will they be provided, and when do you expect to be able to give us confidence that they are no longer ongoing?
We expect to give a full update with our next quarterly in January, and by then we'll certainly know if our bladders are full and that's resolved our issues with NamWater. And we'll also report on how the NamWater deliveries have gone at the end of the quarter as well. And we'll also provide full transparency on the grade. And as we always do, Mitch, we'll also update our guidance position in a continuous basis.
Good morning, Ian and Anna. Thank you for your time. Just a question around the water issues, specifically with NamWater. Was it a sort of a regional issue? Is it statewide? Or is it more sort of specific around the delivery to the Paladin Heinrich mine?
I mean, what's the risk that your allocation for water at Heinrich gets sort of revised lower from NamWater?
You can see the analysts were pretty they kept going at it, they kept asking. Yeah.
And I won't lie, till today, I didn't have a full appreciation of how this water works in Namibia. So I thought, if I don't know something, why don't I tell every other bastard that's listening as well?
Learn it and then teach us.
I'm learning with you, money miners. It seems like water it's a big ticket item in Namibia, and especially where all the uranium mines are located in that sort of western part. It's pretty bloody arid, and coupled with the drought at the moment. Let's not discount the country is in a drought at the moment either. So now, as I said, NamWater, they're like the state-owned water, Nam, I assume Namibia. So they've got like reservoirs hooked into aquifers. You can see it, Swakopmund, that's on the coast there. And then you've got the Orano desalination plant just north of that. And that's because that was originally constructed for the Trikobji uranium mine, which was then Areva, before Areva came Urano. And that was it was built for that mine, but the mine never actually got to, full-scale production, placed on care and maintenance in 2012. So, and it still is owned by Orano, and Orano actually sell that water to NamWater. So I'll have to look in to see what's going on with that bloody mine. So, and you can see on the map here, where that water is and where the big mines are. So your big mines in Namibia that are operating, you've got the Rossing mines, that's owned by CNNC, China, 10 million pounds per annum. So they're pretty decent size. That was 4.5% of global production in 2023. They produced 6.5 last year, but it's got 10 million pound capacity. 350 ppm. So she's isn't it funny looking at the Namibian mines to the next gen and all that. So, so it relies heavily on that Orongo desal plant, which is Orongo's the name of it. Orano is the owner of it. So, but it's in confusing. 2022, so Rossing Uranium Limited, that's the company it operates under. So they actually built 6 new water reservoirs. In addition to, there was, I think, 3 existing reservoirs that are operated by NamWater. So you can see, and there's a bit of a theme here of what gets put into Namibia by these Chinese companies. So then there's Husab. That's operated under Swakop Uranium, 90% owned by CGN, the other Chinese nuclear company, and then the other 10% is Namibia's state-owned mining enterprise. So that's 13 million pound capacity. That's the big one. Produced a bit under 12 million last year, so 15 million tonne a year in 2 open pits. So, and that also relies on the Orongo desal plant. So, but CGN has, and it was announced just recently, I think it's been approved, they're financing another desal plant to be built. And so it's not NamWater funding it, because they were going to have to fund it. CGN are funding the whole thing. So it said Namibian 3 billion, which I think it looks about Aussie 250 million. So that's due to be going by end of 26, probably 2027.
Interesting, but you wouldn't assume that, you know, someone other than like a CGN would just make their capacity available to anyone other than themselves, right?
I'm not sure. I assume they would get priority if they're financing it, but I would assume if they're not using the whole thing, it would be similar to the existing one where they would sell the water and buy it back off to NamWater, and NamWater will distribute the extra. So it sounds like it's heading towards there will be a lot more capacity for water in the future, but until it gets to that, 2027 point. Now, Langer Heinrich, the one in question today, remember it's not fully owned by Paladin. 25% is owned by CNNC, so not without help of the Chinese. And they primarily depend on there's groundwater extracted from boreholes in the Swakop River Valley, but then there's also water deliveries from NamWater from that Swakopmund. Bloody God, I'm butchering that, but bloody JD, do you know how to pronounce that?
Swakopmund,
that'll do.
I think you're doing well, mate.
That base reservoir there, which is fed by aquifers and the desal plant. So it's like the hub. Now, other ones that are potential development projects, so you got like Deep Yellow's Tumas. So they've got to actually build a 65-kilometre water pipeline to that base reservoir, and then again, purchase the water off NamWater, which equates to about 12% of the processing cost to buy that water. And then Bannerman's a Tango project, same thing. They've got to put a pipeline in to hook into that base reservoir, purchase the water. Pipeline, they're a lot closer to the coast, so the pipeline isn't as long. But it obviously NamWater have got the control over the water, but it looks like China has a big influence in Namibia. Like the fact that they're investing in that desal plant. They've built those 6 reservoirs, which you would assume would have taken pressure off, because that water's not just for mining, that's to supply the towns and everything there as well, and the communities. It's not just for mining. That is so it's like a very water dependent area.
Totally.
So I think I've heard also that the desal plant, because it can occasionally face these like algal blooms and like sulfur eruptions in the Atlantic Ocean, and that causes like temporary shutdowns because the impurities affect the desalination process, and you can't actually create clean water from it. So
there's unreliability.
So there's, I think, and I've heard it's only for maybe 2 months of the year, but it is a factor. So there is, I think, sometimes cases where the desal plant mightn't be feeding as what it should, and then there's reliance on reservoir. But then you couple that with a drought as well over there at the moment. It's whether that's, I'm not sure if that, I don't know if that's happening now. I'm just saying it is something that can happen with that desal plant apparently. Mm-hmm. So interesting that you look at well, obviously there's the Chinese ownership on the 100% mines, the big ones, then obviously the stake in Langer as well. Mm-hmm. Interesting that like Deep Yellow and Bannerman, they've got 100% stakes in their projects at the moment. So I'm interested to see if over time they maintain 100% ownership forever, or if like Namibia will take on a stake at some point. Don't know.
I always thought that, like an exit to the Chinese was on the table for at least one of those 2 companies.
Mm.
But
Yeah, well, it definitely looks possible now when you look at the landscape. So I guess the question from today, getting back to Paladin, dropping the guidance, is it because they can't get enough water from NamWater in addition to the lower stockpile grades, or are there other issues?
Big question. Well? They did state that if there was like an infrastructure upgrade on a part of the network that was specific to just them and their project that was required NamWater to actually work on. But they were so kind of cagey in providing any timeline on when that would be remediated. So it's a very valid question you raise, and I'm curious to know where you got to.
Well, it's if you piece it all together from like the quarterly, the ASX Aware, and today. So it says it from the ASX Aware query, and I'll bring up the screenshot. It says they're experiencing lower than anticipated tailings water recovery, which adjusted their water balance. So tailings water recovery is effectively one of the water supplies for Langer Heinrich, in addition to that Swakop River and the NamWater that they purchase. So effectively, if they're not recovering enough out of the tailings, it means they've got to get more from elsewhere, whether that's already been fully allocated or not, and that's why they've ran into, so like, is it NamWater hasn't been able to supply enough water, or they haven't been recovering enough from the tailings because they're fully allocated there? That's the question. So, and then they talked about like lower levels of fines rejects. So my understanding is that not removing the fines from the slurry, so the real fine shit, sometimes waste, but it can contain some uranium, it results in, like, apparently what my research has indicated, that fines materials are a high surface area to a low volume, which can mean that some uranium can adsorb onto those fines. So if you don't remove the fines before the processing, they absorb some of the uranium and then piss it out to tails, which is why they alluded to the fact that they were getting the lower fines rejects resulted in lower overall recoveries in the quarterly. So, and then they talked about flow variability in the countercurrent decantation due to pump and pipe sizing issues, or changes needed. So they're effectively the thickening system. So thickeners are what gets the water out. So your slurry's got the optimum density for the uranium recovery process. So if you combine that all together, all those different factors, it just looks like the plant performance, and yes, it is in ramp up, but it just doesn't look like it's in balance at the moment. And there's a lot of modifications and improvements that have to take place to get it all talking to itself properly. So, because if the thickeners aren't operating consistently, the density of the slurry is too wet for process, and not enough fines are being rejected, not enough water is then getting recycled back out of that because the tailings are like, it's too wet. So you're losing more water. It's just, is that all more of the issue than NamWater not being able to supply enough water?
It's kind of amazing because this was a mine in operation for a long time. Now they've tweaked the process. It's not the exact same, but you'd think if anyone's got half a chance, it's a restart project.
I take the other view. I think restart projects are restart projects for a reason. They didn't last the cycle. They're definitionally going to have like challenging.
But the uranium price absolutely fucking shit itself.
100%. But plenty of uranium mines lasted the cycle. I get you. This is the marginal production that is coming back online. Like, and I tweeted that.
That's true, 100%. But you can go through those numbers when you do the restart studies and all of those things. You don't have to price it as aggressively because you've got that backlog of all the knowledge you've got.
Yes, I just my broader point is like, name me a restart project in the last 5 years that's ramped up smooth.
Name us a new project that's ramped up smooth.
Yeah. In the last 5 years, Capricorn, Emerald, like
that's it.
Yeah, restart project. They're all like, they're effectively all distressed assets. Like North American.
Yeah, I don't agree with that.
Yeah.
But they're. So that's the question. That's the question. Is it water? Is it or that? Is there more to come in the actual performance, even if the water gets sorted and it starts raining there again?
Yeah, there's a sort of difference between running at a higher cost and not running or working, and that's kind of the distinction here. I sort of accept that Langer Heinrich will operate at a higher cost relative to the ones that sort of endured, but these technical challenges, like I said, I would have thought they have some of the knowledge to try and maybe tackle a bit better, but fingers crossed they sort of get there in the end, and in time we actually find out a bit more information on what's the real hold up.
Yeah, and they're processing lower grade stockpiles effectively compared to what they're going to mine. So like that changes the whole plant and everything. So once I get this right, if there going to be any changes or anything needed for when they actually start mining, or will it all be in sync? I assume it will be, but that's waiting for that point. But I guess this was supposed to be the point in time where it was low cost, just processing, no mining, make the cash to get them through, which is probably a good time to talk about financing and cash.
Big time. I'm keen to talk about it. I mean, in January, Paladin, remember when they executed that $150 million debt facility? At the time, their share price was $12.30, and it didn't stop there. They ran all the way up to $17.80, right? But at the time when they executed that debt facility, I was critical about the decision to do so. This is what I said then. I actually don't think I would have taken a debt facility here. And this might be a bit of a controversial opinion, and I'm sure the uranium bulls will disagree with my take here, but I would have simply raised it in equity.
Looking fit there, Trav.
Yeah, I know. Put on some weight. Other than that, mate, like, so I completely stand by it. Like, there was no need to put debt in the capital structure, which now raises sort of balance sheet like overhang in a more material way than was necessary. Like of that,
especially the fucking share price up there.
And this is the thing. This is like, I would describe it, and we've seen it across like a lot of different ramp up companies. Is a degree of like overconfidence or even arrogance in being able to control all of the variables. You think everything is a known, and there's unknowns, and that's why you don't want to unnecessarily put debt in your capital structure if you're a marginal project. Of that, US $150 million, they've drawn down $95 million as at 30th of September, and here we are. The stock is $7.33. Like at the moment, it's 40% lower than they were at that January share price when they put the debt in place. Instead of making free cash flow by processing the stockpiles, the cash has been going in the opposite direction. They've had these unexpected water issues. The grade is disappointed on the downside. There's a plant stuff like you talked about, and that's exactly. I'm so strong in my opinion that marginal producers should overcapitalise with equity, especially when it was priced at 1.3 times NAV in January when I made those comments. And I tweeted it this morning. This is my restart. Restart projects, they're restarting for a reason. They are in general tough. They won't be smooth. Expect the unexpected and manage your balance sheet accordingly. And you've got debt in the capital structure now at Paladin, which admittedly is still small compared to their market cap. They could always pay back with equity at the current price, but what would have been a mere 6% dilution in January is like now 12, 13, 14% dilution, right? Just to, if you wanted to remove that from your cap structure. And that's the thing. I'm not saying they won't make it all work in the long run. I'm saying why unnecessarily add financial leverage in the most risky phase of the mine? That's the bit that can really hurt shareholders down the track via the unnecessary dilution. It's when that single asset developer, has trouble in ramp up and they don't have the flexibility to ride it out because they put debt in there. That's the thing. Marginal projects should overcapitalize with equity, in my opinion, if they're able to fund it that way. And not every producer can, but they certainly could have.
When they talk the focus, the notorious rule of thumb, like, your capital raises dilute shareholders, but you dilute 15%, or you can have a commodity price swing or a sentiment swing and your share price reduces by 50%. Yeah, wouldn't you rather just dilute and take the risk away?
That's the thing. You're going to have to dilute way more, in the distress case. Yeah. Like it's just understanding what the value of your scrip actually is at any point in time and being kind of either opportunistic or not in that context. Look at their short interest, like the latest data, short man's like nearly 15%. And sure, some people will say a good chunk of that is like M&A ARB funds that buy the target, short the acquirer to completion. I don't believe that's a huge component here, especially when there's still deal completion risk with the Investment Canada Act and all that sort of stuff. Especially now, I think the short thesis goes something like this: troubled operations, debt in the cap structure, uncertainty on ability to rectify water issue in a timely enough manner, underwhelming free cash flow without even mining costs yet, contracted supply challenging to meet if water issues persist, which they hinted at potential guidance change at the next quarterly. So then are they going to meet contracts if guidance is downgraded again?
Well,
are they going to have to go to the spot market and buy?
Well, if they've already exeted their flex,
and
they've got meet the 3 million,
and they've got inventory like an inventory loan at the moment for 200,000. So then there's a new development project which if the FCU deal closes, that's going to need a development budget. So I think the shorters are pricing in a future raise. That's what they're doing. They're sort of either or they sort of.
They got it today.
Yeah, exactly. If you're one of those, like the shorters, they'll probably pairs trade it with a different name to kind of avoid kind of view market sort of risk, and they'll take that sort of stock specific outlook. And I'm not saying that's how things are going to play out. I'm just sort of articulating what the short thesis, would have been on that stock.
Well, I think what you're saying is these are the risks, but debt is one risk that could have been removed.
100%.
Yeah,
you didn't need that. That's just that was completely unnecessary in my opinion.
Yeah, and I think it was at the same time. It might have been the same discussion we had at the time. Just how richly they were valued. I know you said 1.3 times NAV there.
Yeah. Well, they're one of not many producing uranium companies in the world that the ETFs were feeding into, and that's remember Paladin and Boss were just fucking flying.
Yeah, and I mean spot and term were somewhere around 80-ish, plus or minus a little bit, and you had to back out something well over 130 odd bucks to try and make it balance. You had brokers flashing through multiples and then upgrading and using a higher multiple instead of just a basic NAV calc. Try and make it all stack up. So those sort of little flags stand out, don't they?
I'm seeing there's tweets on Twitter, people saying Fission should be arguing for a material adverse event here and bloody get it, get shareholders out of this deal, and that's the sort of rhetoric that's going around in the context of today's announcement. So.
Has the merger ratio changed at all? Because they've both gone down.
Merger ratio doesn't change at all.
Yeah. So it's like they've tracked each other. So
but Fission shareholders.
No, but they'll be arguing for a bigger portion of the ratio, or just a break in it.
But isn't
you can't
Fission? I suppose as a result of this, yes. But I think in terms of the market performance, Fission's share price would have gone down technically the same as Paladin.
Well, this is
more specific.
Yeah, what you're saying is sort of broadly true. They'll kind of track with that error for the doubt that people have in the deal kind of getting through.
If you're a Fission shareholder, you're a bit grumpier because your pro forma is now looking...
It's got issues.
Yeah.
Which, as we said, ramp up. Mining's fucking hard. But, we'll see if they can get it back on track. I'd love to actually go... I just want to go from the air and see what's going on. Maybe like Nathan Daish, if you're listening, I want to hop on a bloody Daishsat helicopter and head over to Namibia. Get some eyes on this bloody thing. Use it, come. How many can you fit in a helicopter?
I reckon. 4?
Yeah. Us 3, 5, GC and Daishi. Bloody, mate, I could run a geophysical survey over there, maybe find some uranium for stock code MUN. Maddie's Uranium Mining. That's the ticker.
I like if you could do a righto money miners with the the helicopter.
Do you reckon they could detect water from a Daishsat survey?
Oh, Paladin would be hoping so, would they?
I reckon they probably do. So if you want bloody geophys done, magnetics, bloody gravity, seismic surveys before I take Daishi over to Namibia to find some uranium, give him a buzz. Phone numbers in the show notes. Daishsat.
Go Daishsat.
Kingsgate. GC. JD, you're a GC.
We are going to a different part of the world now, back over to Thailand. So we spoke about these guys a couple months ago, and I thought it was worth going a bit deeper on them. So they came out with a 2-page update today, fellas, and it was broadly sort of simple stuff. Operations improving, October, a record quarter on the ounces front. Availability, utilisation looking a bit better, relying less on the stockpiles. So good good stuff, things you want to kind of see. They had been doing a couple of studies which sort of yielded some positive results, which could reflect in better operating costs in time. So they had tested processing the carbonaceous ore, and that meant that led to recoveries not being, detrimentally affected. So they can flush that ore through, helps with the mine planning and sequencing, those sorts of things, as well as testing the essentially the amount of cyanide they need to use. And the outcome is that they think they can use a little bit less per tonne of ore processed. So all kind of good things. But there was a super, super interesting detail that they chucked in the last paragraph of this one. And hence I thought it was worth having a bit of a chat about it. So I'll chuck it up now for those watching on YouTube. But what it essentially says to the listeners is that the company has noted the recent volatility in the stock price. They think the stock doesn't reflect the true value of the company. Little sort of surprise on that one. The management and board will review and consider capital management options. So that is pretty juicy, and I thought it was worth going through the sort of cap structure of the business and saying what sort of options they could actually, undertake to make the stock price more accurately reflect the value they think the company has.
It's an interesting company, and it was like, all the goldies are just like bleeding today, but that one was like kind of up 1% or something like that. So clearly,
a bit of relative outperformance on that front. If you look back, a few months though on the chart, hasn't performed quite as strongly as some of the other names. So another reason why I thought it was kind of worth looking into. So that capped at about 330 million at a $1.28 share price, EV of about $360 million. So looking at where a kicker could come from for shareholders, one thing that stands out is they've got a silver gold project in Chile, Nueva Esperanza. So 500,000 ounces in gold, 83 million ounces in silver. Silver's been on a hell of a run this year. Now, there's been a long-standing resource and reserve statement here. A PFS came out in 2016. That's a bit of a sort of red flag. Like, why hasn't it gone anywhere in that kind of amount of time? But they did say they're going to come out and provide a new resource and reserve statement this quarter. So spinning that one off could unlock a bit of value. They can market it as, they call it, the 7th biggest silver resource going. And yeah, I mean, maybe that's a sale process. There's actually been a couple other sale processes for silver projects in the Americas lately. So that's one to keep an eye on. Maybe they spin it off and kind of list it or do something else. One to keep an eye on. In terms of cash, they don't have an awful lot. They're in a net debt position at the moment. So, there's not an awful lot of opportunity just yet for a buyback program or a special divvy. But flicking through the resolutions they put forward for the upcoming AGM, they did ask for approval to buy back up to 50% of their shares on issue, which is kind of interesting. And they said regardless of that, they're going to study buying back 10% of their stock. You don't need shareholder approval for that. And if you dig into the reasons here, any cash proceeds from its TAFTA claim, TAFTA is the Thailand-Australia Free Trade Agreement. What this essentially ties to is the expropriation that the Thai government more or less did in 2016 of the asset of the Chattree gold mine, which meant they couldn't mine for 7 odd years. Then you've got, more obvious ones like cash flow from operations from Chattree over the next sort of year or so when it sort of starts to bear a bit more fruit. And then again, the sale or other liquidity event for the project they have in Chile. So I thought it'd be worth just digging in pros and cons. Is there a bit of value here? That's the kind of direction I went about this one to see what was kind of interesting about it. And to start on the kind of positives, in the context of the mid-cap goldies that have run quite well, these guys are going to produce about 100 to 130,000 ounces of gold equivalent through to FY28 at about a US $1,500 all-in sustaining cost. So it's not too hard to paint a pretty bright future of that just in terms of cash flow they can generate. They're an unhedged producer.
Is that attributable, JD?
Yep, all theirs, yeah.
1,500, that's US. So that's a bit higher than what we see with WAF and that, isn't it?
Yeah, WAF comes in below 1,500. Yeah. They've of course got another operation coming online as well.
Open pit, eh?
Open pit, definitely, mate.
Fucking MMS would get that down to 1,400, I reckon.
They'd have a field day. It's very low grade. 1,200?
1,200?
Do I hear 1,200?
I think if MMS are digging and hauling, open pits, I think you can at least drop 200 US off your all-in sustaining cost.
I think you're
I
right.
think that's a good rule of thumb.
Yeah, they wouldn't be the first ones to take them up on that either.
They don't just hit the all-in sustaining cost; they hit the upfront capex as well. Because that can be zero.
And they hit the stock graph as well. They hit it up. Look at that is an accurate display of when MMS got the contract for Black Cat.
Amazing. That could be your company.
Look at that. I don't need to say anything more than you inject MMS in your company and everything just gets better. Just have a look at that stock graph.
Just give them a call.
Not even gold price related.
No.
At all.
No.
So anyway, sorry, JD.
No, not at all,
continue
mate.
on with MMS just interrupt all the time.
On the tax front, it's kind of interesting. About 25% of that all-in sustaining cost is royalties going to the government, but they do have an 8-year tax holiday. So you kind of see the government payments more or less are wrapped up in the all-in sustaining cost, but the tax component after sort of EBITDA isn't quite as severe as it might otherwise be. And, a lot of the capital items have been spent already. There's those other liquidity potential events that they could have, decent reserve life. Net debt, so they have a cash balance which should see them through bar any hiccups, but, knock on wood, given everything we talk about, all the time with ramp up and how it can be risky. And just to circle back once more on the expropriation of the mine back in 2016, they did get a decent payout in 2019. So there's a bit of history here. That was from the political risk insurers. So clearly didn't use CRE. These guys sued Zurich and a group.
I've picked that up a bit late.
So
good work.
They sued Zurich and a sort of other consortium of insurers on this one. They got about $80 million, but the other claim is with the Thai government essentially. And I read a bunch of articles by various Thai newspapers. They were sort of quoting figures between 25 and 39 billion baht, which translates to 1.1 to 1.7 billion Aussie dollars. But that was prior to Thailand allowing them to restart the mine, so I wouldn't be banking on anything near that sort of amount.
Yeah, right.
Kingsgate also haven't revealed what they're actually seeking in damages there, and it's a process that has been going on years and years and years, so who knows when it'll actually lead to anything. So there's some of the positives that stand out there for the company, but then you've got a fair few challenges as well, which we've got to sort of highlight. So firstly, this is Thailand, you're not operating in Western Australia. Ramp-up risks are prevalent. We see it all the time. The open pit reserve runs at 0.82 grams per tonne. So, pros and cons, there's a lot of sensitivity if they have exploration success to improved cash flows, but it's not a huge, margin of safety there when you're operating at that sort of grade. High-cost debt, so Nabari provided debt a few months ago. They need to sort of clear through that. Hopefully within a year or so, they can be in a net cash position, but, they've got to get there first. And any sort of slips likely mean a capital raise. And the history. The history is super important. So the mine was shut down in 2016, like I sort of said, over environmental concerns. So essentially all the people living in communities around the mine were concerned. They'd complained to the government. There's a long, long history here with lots of ink spilled over it. But a lot of the locals, they tested their bloods in numerous rounds of testing. They complained that they had elevated levels of heavy metals in their blood. The company denied this all the way through. They said they did their own testing and proved it wasn't them, but that's not something a lot of investors will want to associate with whatsoever. And it's a risk that's just got to be front and center for people looking at this company. And then you've got an interesting one just to finalise on the challenges. The exec directors, the MD and the chair, so there's a 4-person board here, took next to no stock in either short-term or long-term compensation in each of the last 2 financial years. They took big salaries, big cash bonuses. So I think to start with, alignment could have been a bit better. That the managing director holds almost no stock in the company. The chairman does hold a decent amount, over $5 million worth of stock, so that's a decent amount. But management is a detail I'd want to get a much better read on. I've just spent 3 odd hours reading about the company. It's one I'd want to go quite a bit deeper on to get a feel. Given all the other risks kind of at play, you'd want to make sure they're really on your side, especially if, you know, they do come into a bit of cash in one way or another. You want clarity on how that's going to get distributed. I know they've put up the resolution for the buyback, but going down this rabbit hole just to finalise, there was a 249D in 2018, and it was pretty funny. This company, Metal Tiger, they had 8.5% of the company at the time. They had
listed as well, Metal Tiger?
Yes.
Yeah.
It's a real Thailand feel to that name, Metal Tiger.
So there was an EGM in early 2018, held face-to-face, and there was some stern words traded between some shareholders and management. Bit of yelling going back and forth. There was a good AFR article on this one with one of the shareholders yelling at the chairman, "You're an arrogant, overeducated idiot." So
sounded like a Trump quote.
Yeah, it's pretty funny. So there was some educational reading on this company and the events that have sort of came out of the back of that.
Overeducated reading, JD, you'd say.
I'd say so myself, yeah. So, yeah, if anything, it was entertaining, and yeah, this trades relatively a lot cheaper to a lot of the names we talk about. And as always, there's a good reason why it trades a bit cheaper. But who knows? I mean, from all the stuff I've blabbed on about, do you guys have a different sort of feeling or any sort of history with this one at all?
Geez, I feel like I'd be. I don't hold the right to comment after you spent so long on it, JD. So I'm just agreeing with you.
Well, what do you sort of think? I think the management one's a really interesting one. Like an MD who, by all accounts, has done a great job. They've met everything to date on ramp up. They're doing a good job. Let's hope that sort of continues. But holding no stock in the company while talking about these sort of capital returns, I just that sets off alarm bells, because like, how's he going to get compensated? If he's not a shareholder, why would he go and launch a big buyback program? Like,
yeah, has he got any performance rights attached to TSR?
I'd have to dig into it. Not that I sort of stood out to me straight away, but it was just a big cash bonus last year as well.
Yeah,
but
yeah, I think alignment matters heaps. You've always, like, you can see value sometimes in these single asset kind of producers in funky jurisdictions, and you just have to stomach the tremendous amount of risk that comes with that. Like, just look at what happened to 1064 just last year. I mean, there's a quote someone told me when we last time we talked about these gold producers or whatnot in Southeast Asia, and that's Southeast Asia is where rich Australian men's money goes to die. in this case, there's been some value creation in recent history, but yeah, you always get nervous projecting that into the never future.
100%.
What was the other one? Medusa. That was a bit of a
Medusa.
That's what 1064 was called before it was 1064. Yeah.
Yeah.
And there's been some, success examples. It's a sort of a matter of balancing the risk and taking the money when you get it. I think Resolute, different part of the world, but was a very interesting case in point.
Emerald,
great returns, and then bang, it sort of it hits you.
If they go for the shareholder returns buybacks, like shareholders won't be complaining. If they wanted to diversify their single asset exposure, I think they'd have some supporters in that camp too.
Yeah. Last sort of comment, I reckon a few brokers might pick up coverage given the sort of risk profile of where the company's at, heightened risk of a capital raise, only 2 names covering it at the moment. A few equity research teams might do well to do that for their banks. I wouldn't be surprised at all if we see something like that.
What do you think they'd raise for?
Well, if there is a ramp up, slip up, given the risks
okay.
facing the company.
Right.
What was it? You probably said it. What was the EV 360 mil? Gotcha.
Imagine that. Cap raise to buy back our stock.
Funky world. Yeah.
Just looking at the numbers now, 300 odd mil, 100,000 ounces equivalent. Yeah.
And you could pretty easily back out over $100 million EBITDA, and like this year, even more next year, just on a pretty, very back of the envelope type of math on that.
Just how we like it, JD.
Keep it simple, eh?
Oh, mate, no back of the envelope bloody contracts with MMS. Highly detailed. The most detailed contracts, geological and support you'll ever find to move dirt. Unbelievable. Bloody, a grounded camp. Far out. How good are they? Detailed. CrossBoundary Energy. A lot of detail goes into a hybrid power station. Look, the detail that goes into creating the steel for a Sandvik split set. Unbelievable.
Talk about detail. CRE insurance.
Detail for free to get a free appraisal of your current insurance policies. Oh, K-Drill just detailing the the ground beneath you with shitloads of RC and diamond. And
DageSat.
There is no more detail than you will find in a GeoPhys survey provided by DageSat.
Legends. Thank you to all the partners and to the money miners.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.